Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. Historically, November and December, they have always been considered as two of the biggest and most profitable months in the economic calendar. This year should be no exception. With global inflation surging at the fastest pace in 3 decades, it's no surprise that commodities have firmly positioned themselves as one of the best performing asset classes of 2021. So far this year, commodities have been on an unstoppable run. Everything from metals to energies to agricultural markets hitting new record highs. Almost weekly, we're seeing the super cycle gathering pace. There are plenty of reasons why commodities are on the move. Everything from rapidly surging inflation to tightening supply, logistical bottlenecks to booming demand across many highly essential commodities as world economies recover from the COVID-19 pandemic. So far this year, a long list of commodities have already surged to all-time record highs, which includes aluminium, copper, cotton, coffee, crude oil, natural gas, nickel, lithium, steel, uranium, wheat and zinc, just to name a few. In total, 27 commodities ranging from the metals to the energies to soft commodities, they have tallied up double to triple digit gains so far this year, and this is just the beginning. The commodity supercycle shows no signs of slowing anytime soon. Now, looking ahead into next week, inflation will continue to dominate headline news. The biggest market moving events that traders will not want to miss out on will be the US CPI inflation data for October, which is forecast to come in at 5.8%. As labour market shortages, logistical bottlenecks and supply chain issues continue to worsen as we enter the holiday season, many economists, they expect headline inflation will likely push above 6 to 8% by December, which ultimately adds fuel to the commodity super cycle. This of course presents you, savvy traders, with great opportunities to generate huge gains fast. Other key macro events that traders will be watching closely, that includes produce price inflation and consumer sentiment data. As you know, volatility creates opportunity. Banks, hedge funds, they are making multi-billions capitalizing on the week-to-week volatility. And of course, it's not so different for the retail market. The majority of our clients at the Gold and Silver Club are utilizing our proprietary research-driven trading approach. They've already made in excess of 6 and 7 figures so far this year, and we still have another 2 months left to go. So if you have been kicking yourself for missing out on some of the biggest trading opportunities so far this year, you still have time to make 2021 your best year yet. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. As you would have recalled, we mentioned on both gold and silver asset of the day our ranges for gold last week, and we hit those spot on Friday. So even when gold had broken down at the beginning of the week last week, broken down towards $1,760 per ounce, we talked you through our upper end of the range, still remained at $1,814 per ounce, and our expectation was that that would get hit last week. We indeed saw that on Friday after non-farm payrolls data, so I hope many of you have capitalized on that. We still do, of course, have our position on from $1,727 per ounce, which of course you know about. That trade is currently up over 900 points. So of course, for every 1 lot contract you be trading, that's $9,000 of profit. For every 10 lot contract that you be trading, that's $90,000 of profit. Now, what has played out, which in typical fashion, we saw this last year as well, is we've had the breakout in the first week of November. So if we go back and have a look at the price action as we got into the first week of November, back in 2020 as well, we had a very similar breakout to the upside as well. However, after the non-farm payroll data, throughout the rest of November, gold corrected to the downside. So it corrected over 2,000 points. Now, this is not just last November. In fact, it's now happened over the last 7 years that gold and silver, once we've got the non-farm payroll data out of the way, they have corrected for the remainder of the month, setting up for some fantastic buy opportunities from lower prices as you go into the month of December. So where we are right now, this is not a surprise at all to see a very similar playbook to last year, breakout to the upside, which we've capitalized on. But I will put it on your radar that it's quite possible, very much like previous years, that with volatility going into the month of November and with the potential for the dollar if it was able to again retest the 1-year highs and break out, you can see this much more clearly on the weekly chart where it's been building up momentum. If it's able to break and close back above the 94.50 level, then back above the 95 zone, this is what could set up for some short-term pressure on gold and silver as well over the month of November, which would be very typical for this month. Often it is very short-lived, this pressure to the downside. It's just specific to the month of November. However, this also helps you not to buy in too high, not to FOMO in. As a result of gold's breakout here to the upside at 1,818 US dollars per ounce, this is going to get a lot of traders out there very excited that we are at these levels right now. We always like to be early to a trade, which is why we've been buying in from 1,727 US dollars per ounce. But we're now getting to levels where we're more interested in banking profits rather than getting delayed confirmation and then buying at the top of a move, where in terms of data and cycles, this is not supportive typically for this time of year. Now, if the price keeps going up, we will benefit. However, I'm going to put it on your radar that typically, as you go into next week and throughout the month of November, gold and silver, in fact, do come under pressure. So what you may see is some more follow through here to the upside at the beginning of next week, which can certainly lure in more traders to FOMO in towards the top of a move. We're basically within a very clear range at the moment on gold, where you can see the 1830s has provided a lot of resistance, and we're also getting support down to 1750, 1720 and the 1675 zone as well. So essentially we're at the top of the range right now, so just be mindful of that as we go into next week. Wouldn't be surprised at all to see a little bit more upside in the short term, but then as we progress throughout the month of November and towards the end of next week, it would be typical to see some profit taking and some pressure here, specifically for gold and silver. This does not relate as much to other metals such as palladium or copper at this time of year. In fact, copper, we've seen another 3 test into liquidity over the last few days. We've taken the opportunity on the sell-offs over the last week to build lower positions on this market. Copper, we talked to you through last week as well. We're looking for any selling pressure as an opportunity to establish further positions. We've also done this on palladium as well. Palladium's had a nice breakout in the last week. It's up over 2%. It broke out 4% on Monday. Many of you reached out that you were able to capitalize on that move that we identified with you last week as well, where we've essentially now had that breakout that we were expecting. As you move into a new month, moving into the month of November, typically palladium is a strong performer, and that is also the case for copper as well. So both of those I would certainly have on your radar. Now, normally crude oil, especially at the end of October into the beginning of November, is under pressure. And we've absolutely seen that play out now. 2% decline here in the last week, and that's also been similar with natural gas as well, dropping 2% there. We still do hold some exposure on natural gas from lower prices. We are also doing the same on platinum as well, where we bought in at 947 US dollars per ounce. That trade is currently up over 850 points, but very much like gold and silver, usually there's some pressure to the downside throughout the month of November, and often you can get better prices. Natural gas very strong typically over October and through into the middle of November, which will be towards the end of next week. We're keeping some exposure on here with natural gas. Our position right now is up 550 points on this market. We bought in from lower prices. We are expecting more choppy, range-bound price action over the month of November. However, the same would hold true as we discussed last week. If we were to see a dip back down towards the recent swing lows here, that's where we would be interested in adding further exposure to this market. We were gifted with another pullback at the beginning of last week, and we had another slingshot move higher throughout the middle of last week as well, which very quickly moved over 700 points to the upside. So bringing you back to gold here, feel free to go back and watch both Tuesday's gold asset of the day and also Thursday's silver asset of the day. We mentioned on both of those the potential for pressure as you go through November, but expect the first week in November to be positive, and that we are looking for 1,814 US dollars per ounce to get hit last week. And that's when we were trading all the way down at 1,760 US dollars per ounce last week. So you can see how well that played out as well. So essentially, as we go into next week, wouldn't be surprised at all to see a revisit back towards the 1830 level. This is a level where we may start to consider taking more profit off the table. But again, typically throughout the month of November, you need to be careful. You don't want to be one of these traders who FOMOs in with their delayed confirmations and ends up picking the top of the recent breakout here when there's been so many opportunities to add at much lower prices at the end of September and the beginning of October here. Multiple opportunities to buy gold much lower, so you wouldn't want to be using delayed confirmations to end up FOMOing in and buying right at the top. As you know, commodities, they don't move up in a straight line, they zigzag. That presents, of course, yourself, savvy trader, with back-to-back opportunities to really capitalize on the short-term macro-driven volatility. Technical analysis does not work. We're in a highly data and event-driven trading landscape where the markets are changing minute by minute, hour by hour, day by day. If you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, then you need to adapt your strategy to the current market conditions and, most importantly, utilize a professional, research-driven approach. In these heightened times of volatility and rapidly surging inflation, the importance of having an essential income-generating skill like trading has become a must-have necessity. If the pandemic has taught us anything, it's that you should never rely on just one income stream. Building multiple streams of income, it's no longer an option, it's a priority to make sure that you're inflation-proof and that you can thrive in this highly lucrative climate, not just survive. If you want to gain the ultimate edge to really supercharge your wealth in these fast-moving markets, then you need to trade like the hedge funds, money managers, the institutions, utilizing a professional, research-driven approach. Having access to the right data at the right time, it is the single greatest difference between normal and extraordinary results. The greater your data and intelligence, the greater your edge in navigating these fast-moving markets. Trading like every other misguided retail trader, using outdated technical analysis and gimmicky technical indicators will not work, and you're guaranteed to get crushed and chopped up in these markets. You want to be utilizing statistics, data, market intelligence. Learn and understand the daily, the weekly, the monthly, the quarterly cycles for each commodity. Sentiment, the capital flows, the intermarket correlations, the ratios in the market, alongside that key areas of liquidity, the most important news items which will have the biggest impact for each commodity, creating very fast impulse moves, and of course learn and understand how the hedge funds, money managers, banks and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join a community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel, that way you're always kept updated with all of the latest commodity reports.